Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. So glad you're here. An exciting day. We got the Fed day. We got the Fed coming out with an announcement in about an hour. What's it going to be? Well, it's going to be up 75 basis points. I'll tell you that. What direction is the market going to go? That I'm not so sure. You see, it depends what they say about going forward. Now, if they say 75 basis points and they're going to pause, oh my goodness, the market's going to be off to the races. But if they say 75 basis points and we still got a lot of work to do, oh my goodness, the market's going to go the other way. If I were to guess, the initial reaction might be a little bit up and then we'll come back down, and that's my guess. All right, so we got the SPY. We're sitting above the 50, but right below the 100-day moving average. Maybe it can get up to the 200-day, but I don't think so. I think we're going to start to pull back. We had a big run up last month. We had a 15% move in the Dow Jones just in 3 weeks. I think this rally has come to an end. This crushed a lot of the bears in the market. A lot of the bears, they had to cover their shorts. There was a short covering rally that went up that 15%. But once again, I do think the bears are getting ready to pounce back on this market and send it lower. Now, we got the interest rates going up 75 basis points today. Now, this reflects a lot, for the stock market, but also for the real estate market. Now, the real estate, the housing market crash continuing to accelerate lower, and this is going to accelerate it at a quicker rate. When you think about 75 basis points that the Fed's going to raise, well, where are we at right now on the mortgages? We're at 7.25. I think the mortgages, we're going to see 8% by the end of the year. I really believe that. Now, 8%, that's if you have the good credit. That's if you have the 800 credit score. All right, now what if you have bad credit? Well, if you have a 650 credit score, you're going to be closer to paying 9%. So 8%, 9%, it's getting scary. I'm telling you, next year we're going to see double digits in the mortgage rate market. This is slowing the housing market down. It's come to a standstill, and pretty soon the sellers are going to realize if they want to get out, they're going to have to lower their price. That's the only thing that's going to happen. Now, what I want to talk today a little bit about, I want to talk today about Airbnb. Now, Airbnb, they just came out with their earnings. Now, Airbnb is a fairly successful real estate company. It's only down about 50%, right? It was at $200. Now it's down about $100. That's pretty good for a real estate company these days. But today alone, it dropped 10%. Dropped 10% today, right? Now, why did it drop 10% today? Well, it came out with record earnings. Record earnings, shouldn't it go up? Shouldn't it be higher? Well, no, they said that people aren't using the service as much. The bookings are starting to dry up. Now, when you think about this, a lot of people have Airbnb businesses, right? All right, so they bought these business courses. You've seen the ads. I've seen them actually played right before my YouTube videos started. Anyways, it says, don't flip houses, flip beds, and they're talking about Airbnb, and you pay these people $3,000, $4,000, $5,000, and they'll tell you how to buy the perfect property so that you can get into the business of Airbnb. And now, do you realize that 50% of all the homes that are Airbnb'd were bought within the last 2 years? They were bought in the last 2 years at very high prices. Well, these penciled out on paper, because the rental prices were high that they could get for these. But what's happening now? Well, the Airbnb, they started to raise their fees, right? They started to raise their fees, and the bookings have started to come down. This is what's happening. Now, okay, so we got the bookings coming down, their fees are going up, and a lot of people don't like using Airbnb. Well, they have these things. They charge a cleaning fee, right? And the cleaning fee, it can be more than the actual rental fee. So a lot of people are going back to the hotels. They're actually using the hotels because they're cheaper than the Airbnb. Okay, but the hotels aren't full either. And so the hotels are starting to drop their prices a little bit. Their prices were really elevated for a while, but they're starting to come down because they want to get full occupancy. vacancy. Okay, so it's all starting to come to a head here. Okay, so a lot of these properties that they're penciled out, Airbnb, they were making a lot of money. They were having their own little business, right? Okay, well now these businesses, they're not profitable. They used to have a rental, that was their asset, but now that rental's become a liability. Why? Because it's not getting the business. They're not getting the bookings. They're not being able to fill up the bookings, so they're losing money. So what I'm saying is that a lot of these homes that were bought for Airbnb are going to be coming back onto the marketplace. Now that's not a huge source of inventory, but it's just something that I find very fascinating, that the people that own Airbnb properties, they don't have those diamond hands. They have very weak hands, and they're going to be dumping these properties back onto the marketplace because nobody wants to lose money. I don't want to lose money. You don't want to lose money. If you listen to this channel, hopefully I help you not lose money. Now, what I do want to talk about also, let's talk about another company that was supposed to be a real estate disruptor. Now, Airbnb was a disruptor for the hotel industry. The other one that was supposed to disrupt the real estate business, us brokers, they always want to get rid of the broker. You know, we make too much commission. They want to wipe that commission out so they can go direct. All right. Well, what company am I talking about? I'm talking about companies like Open Door. They were supposed to be the disruptor. People don't want to go through the selling process, so they would just sell to Open Door at a discount rate, and Open Door could then take the properties and sell them themselves. Well, Open Door has a lot of problems right now. You look at it, I think it's a company that looks like it's going bankrupt. It was $40, right? $40 comes down. I think you can buy it around $2 right now. Now, that's just not very good. I mean, this company may not stay in business much longer. Now, Open Door, they did partner with Zillow. Now, Zillow Group just laid off another 300 people. That's only 5% of their workforce. They say they're going to lay off 25%, which would be 1,500 employees. But these mass layoffs are happening in a lot of companies, not just Zillow. A lot of companies are laying people off. That's what's happening right now. There's going to be a recession. There's going to be mass layoffs. Those people are going to be putting their homes on the market because they won't be able to afford them anymore. Okay, so Zillow Group and Open Door, they made a partnership. Now, Zillow Group got out of the home buying business. They were buying homes and trying to flip them, but they lost $1 billion doing it. All right, so what they do, they took all the homes they had and they sold them to one investor. It was a partnership in New York that they sold all of their homes to. Okay, that's fine, right? So it got rid of the problem there. And then they made this partnership with Open Door. That Open Door would be the one making the offers to the Zillow people when they want a cash offer. Now, Open Door, they're offering really low prices right now. Like let's say your home's selling on your street for $1 million. They'll come in and offer you $650. No one's taking these offers seriously, but Open Door is still sitting on a lot of properties. In a lot of areas, they're dumping these properties as fast as they can. They're dumping them at losses. Okay, so these properties are coming onto the marketplace. Now, a lot of people think that the corporations are going to be the ones buying all the properties and keeping the housing market from falling. Well, it could be an exact opposite. It could be all these corporations like Open Door. What if they go bankrupt? What are they going to do? What are they going to do with all the properties they own? Well, it's going to be a fire sale. So they might just be dumping all of their properties onto the marketplace and getting rid of them at any cost. And that may be what brings down the real estate market in itself. So really, when you think about it, it's not going to be the corporations that are going to be buying up all of the properties. It's going to be the corporations that are selling all of their properties, dumping them onto the marketplace. Now, I know in your area, no corporation has ever bought any properties there. So your area is going to be fine, but some areas where these corporations were buying, these are going to be reduced by 20, 30, 40, 50% because they're going to be coming on the marketplace all at once when they go bankrupt. A lot of these iBuyer companies are not going to make it. Look at iBuyers. It's been around forever. This is nothing new. People think like, oh, technology, we got iBuyers now. People have always made lowball offers, lowball cash offers. You've seen them. You probably get postcards from agents all the time. They're actually not agents. They're investors. They're the ones that say cash offer for your home will close within 24 hours. And you call them up and they give you that price. Your house is worth $1 million. They'll say, hey, we'll take it off your hands for $650 and we'll give you all cash. All right. Now, a lot of them don't even have the cash. What happens is they end up flipping it to, it's called wholesaling. They flip it to the person who wants to fix it up and put it back onto the marketplace. But some of them do have all cash buyers, and they come in, they give you $650, and next week you'll see your house on the market for $950, and you go, wow, I could have made that $300,000 instead of letting them make the $300,000. But Open Door, that technology is not new, right? I mean, there's always been these people going around making cash offers, trying to steal the house from you is what they're really trying to do. But it's a business that goes back as long as I've been a broker. I mean, it's been there forever. But everybody thinks that Open Door, they're going to be the disruptor of all the real estate brokers. You're not going to need a real estate broker anymore because you can now sell it to Open Door. And you see, Open Door, they advertise it. They don't charge you any fees. They don't charge you any fees. They just pay you 30% less than your house is worth. Their fees built into that, right? So they say you can sell without a commission. That's how they get your attention. Hey, let's sell without a commission. But I'm telling you, the real estate brokers are not going anywhere. They're still valuable. Anyways, if you like this stuff, I'm Tall Mike. Give me the thumbs up. Why not? If you really like it, punch that subscribe button. I want to talk more to you later in the week. Bye-bye now.